After losing trades for 2 years straight, I learned it was because I was entering my trades at the wrong time. So I asked myself, wait a second, is everyone that's successful or unsuccessful just based off of where they enter the market? And basically, regardless of whether you take a good trade or a bad trade, the biggest factor is at which point in the market you enter. So in today's video, we're going to learn how to do top-down analysis the right way, so you can avoid getting faked out, avoid getting immediate drawdowns, and avoid having a low win rate. Because at the end of the day, to have consistent wins when trading, you don't need to know where the market's gonna go at all times. All you simply need is the starting point and the end point of where the market is going to go. And from there, the key is to find the correct level to take an entry off of and have a strong enough bounce off of key level and seeing the right price action to tell you when it's the right time to enter a trade. All of which we're gonna be breaking down here today. And the first part of us doing this top-down analysis is to find a market that has a clear trend. This is where we go on 3 of the higher time frames and look for each one to show us the same direction of where the market is moving. So for example, if I see that the weekly time frame, the daily time frame, and the 4-hour time frame are all bullish, then it's very clear what type of trades we're gonna be looking for, which is going to be going long. But if, for example, 1 time frame is buys and 2 time frames are for sells, then how do you decide which direction to trade? Well, let's actually go on the charts, see some examples of how to do it correctly. So first things first, we're gonna start off on the higher time frames. So let's go to the weekly time frame and let's essentially identify our direction. The first thing we have to do is find out where the market is currently going and how many time frames can we get in alignment. So basically, if the weekly is bearish, can the daily also be bearish, and can the 4-hour also be bearish? That's what we're looking for. We are looking for the trend of the market. So if we look right here on the weekly time frame, we'll see that we have this low, this high, this low down here, and this high. So this is a bearish market structure, and we're gonna mark the weekly off as bearish because the market should continue to go down and continue to form lower lows. So all we're gonna do is write down right here, weekly bearish. Now we're gonna go down into the daily time frame and identify the trend on the daily time frame. So basically, we're gonna zoom in here on the daily and see where has the market been going. So we have this high, we have this low, and we can already start to see that this is a bearish market structure and price is heading down. So now we're bearish on the weekly and we are bearish on the daily time frame as well. So daily time frame, bearish. The good thing is that now we're starting to see, okay, well, we have 2 of the higher time frames both being bearish. And we didn't just look at the same price action, because if we did, we would have been zoomed out here on the daily, basically looking at the major highs and lows, but that would be basically the same as the weekly. So we zoom in and we look at the market from the actual zoom in point that we should be looking at, which is more closer to what has been happening in the past couple of candles. So that for us right here is this price information. If we go down into the 4-hour time frame, this is where things can get a bit tricky. So this market was going down. We were in a bearish market structure, and then the market has just turned into a bullish market structure because we have candles closing above this previous significant high point in the market. So it is officially now a bullish market that went from a bearish market to bullish. So if it's bullish, then why do you guys see that I'm actually in a sell position here on this trade? Even though the 4-hour time frame is bullish, the weekly and the daily are both bearish. So in this specific trade, I wasn't able to get all of the time frames showing me the same direction, but I still took the trade because I had 2 out of the 3 time frames in alignment. However, let's say you have, let's go down now into the 2-hour time frame, which is another time frame that I like looking at. This one is also bullish. So same thing, basically. We have a bullish time frame right here. If we go on the 1-hour time frame and we zoom in, I would say this one is more on the bearish side, because since this point right here, we've been making consistent lower lows. So I would say the 1-hour time frame is actually, in this case, bullish or bearish. So in this scenario right here, we see that we have actually the weekly's bearish, the daily's bearish, the 4 hours bullish, the 2 hours bullish, and the 1-hour time frame is bearish. Now, how do I decide to take sells on this market? Because the higher time frames are the ones that tell us the overall trend of the market. I'm going to pay more attention to what the daily and what the weekly time frame are telling me, and I'm gonna take sells if they are bearish, even though the 4-hour time frame and the 2-hour time frame were bullish. But if it were inversed, that the weekly and the daily were actually bullish instead, then very simply put, I would actually just be looking for longs, even if the 4-hour and the 2-hour were bearish. Now, in a perfect trade, all of the time frames will be in alignment. But if you wait for the perfect trade, you're not going to be taking as many trades as you may want to. So realistically, you want to just identify where the higher time frames are moving towards and just look for an entry there. And basically, you're going to wait to trade off of a key level. So in this case right here, our key level was 0.48, which is a psychological level. Price basically broke outside of that, but then price showed resistance, which means it was not able to continue to trade above here, which for me is a clear sign that if it can't break 0.48, it's most likely going to continue down. So once I saw that, I just waited for price to start trading below 0.48. Price tried to come back up, retest into 0.48 area of resistance, and price then rejected, and then we took sells going down. So I'm pretty sure the market's going to continue to go down here based off of the higher time frames. That's why trading with the higher time frames is the best possible way to identify where the market's going to go. It's way better than looking at the 1 hour, 2 hour time frame, 15-minute time frame. It just gives you an idea of what's been happening and what's going to continue happening. It literally tells you everything you need to know about where the market's going to go, even more than fundamentals. So even the most fundamental traders there are out there, they're still looking at these higher time frames, because these higher time frames tell you everything about the markets. I'm going to show you here another example on GBP NZD. So on GBP NZD, this market has been going down, and we're essentially going to do our same type of analysis. Let's start off on the weekly time frame. So on the weekly time frame, this to me is mostly a bullish time frame. However, it has signs that it's starting to turn into a bearish market. So far we have higher lows and higher highs. So it's still a bullish market. So I'm gonna mark it off as a bullish weekly time frame. We have to then look at the daily to try to figure out what's happening. Because as I said on the weekly, it's starting to shift into a bearish market. The way that I can see that it could be starting to shift is because we have lower highs. So when you have lower highs in a bullish market, that's the first sign that the market is going to start reversing and going in the opposite direction. Because if you have a bullish market, price needs to continue to form higher highs. The second that it stops forming higher highs, that's the first sign. And then it's confirmed once you make a higher or a lower low relative to the previous higher high. So if you make a lower low, then it's confirmed that the market structure has shifted into a bearish market. As of now, that hasn't happened yet because price still needs to break right below these lows in order for that to happen. But I think that's going to happen here very soon. So that's why we're in sells. I also like the fact that we've rejected the top side very heavily on the weekly time frame. So overall though, it is still a bullish weekly time frame. Now let's take a look at the daily. So what direction is the daily? I'm going to show you exactly how to find the direction. So basically right here, you're gonna look at the lows, which in this case is down here. You have the lows and you have the highs. So this market is actually pretty bullish because we are making higher lows right here, somewhat of higher highs. However, this high failed to break above this high. So once again, this could be the first sign that this market is going to start turning into a bearish market. So for now, it is a bullish market technically based off of the lows. However, we know from the analysis that it's not a very strong bullish market. So if we go down into the 4-hour time frame, this is where we have a clearly bearish time frame. So right here we have our high up here, and we consistently been making lower lows and lower highs. So we're just gonna mark up right there that the 4-hour time frame is bearish, and then I'm gonna explain why this trade makes sense, even though in this case the weekly and the daily are bullish. So now let's go into the 2-hour time frame. If we zoom into the 2-hour time frame, we see these areas of structure right here. We have this high, this low, we have a lower high and a lower low, and we just broke down and made a new lower low right now. So it's bearish on that time frame as well. And if we go down into the last time frame that we're going to take a look at, which is the 1-hour time frame, here we're also very bearish. So we have our lower lows, lower highs. We can zoom in here a bit, and you see that the market is pretty bearish on all of the smaller time frames. Now you could go more in depth, and I do this before taking a trade, and I actually take a look at the 30-minute time frame. So if we take a look here at the 30-minute time frame, we see even more detail. So what I would do here is look at this high and just look at these lows, at the fact that the market is continuing to go down. So because I'm seeing all of this, I know that this market's probably going to keep going down, so I want to be in sells. And like I said, the only two time frames that are bullish, yes, they are the higher time frame, which are more important. However, the weekly time frame, it was bullish for a long time, and now the market is basically done with the bullishness. You can see by the fact that the next highs compared to these highs were so much lower, hundreds of pips lower. That's how you know that this was probably the top of the market for a very, very long time. So even though the weekly is technically bullish, we know it's starting to turn into bearish. Now, like I said, you can go into more detail and go onto the 30-minute time frame like we saw there. So the 30-minute time frame is also bearish. And if we look at the 15-minute time frame, let's zoom in here. And because of this past move that we just had, we're also in a very nice bearish market structure. So we have bearishness on all of the smaller time frames, and we're starting to go from bullish to bearish on the higher time frames. So that's how you know that this is a pretty good market to be in sells in, even though if you just took a look at the daily and if you just looked at the weekly, it could show you that it's best to not be in a trade, but it actually does make sense to be in sells, and I'm pretty sure that this market is going to continue to go down. One more thing, when you're doing your top-down analysis, remember that it's not just about whether it's bullish or bearish. Also be looking at those structure points and look at the distances between them. This on the weekly is a great example. The fact that it was not even able to get close to these highs up here on the weekly, that shows us that there's no bullishness in this market anymore whatsoever. This has turned into a bearish market, and the buyers are not in control anymore. So that's one thing. The second thing that you need to make sure to not overlook any of the time frames. Make sure to actually go into detail, go into each one of the time frames and mark off why it's bearish, why it's bullish. Mark those lower lows, those lower highs, because I've seen a lot of people sometimes get lazy and they'll skip the 4-hour, they'll skip the 2-hour, and they'll only look at the daily and the 1-hour. But if they would have looked at the 4-hour time frame, they would have seen a clear hint that the market was going to go in the opposite way. It literally just tells you where the market's going to go. I've been catching these swing trades every single week consistently for months and months and months, and they keep on playing out. So if you want to know more about the strategy, make sure to watch this video right here on the screen. And if you're interested in joining the 30-day profit blueprint, then make sure to click the link in the description below. It helps break down all of the barriers that you've had in your trading and just get to where you want to go. So I'll see you in the next video, and let me know what you want to see next in the comments below.